Welcome back, guys. Another week. More exciting developments for uranium investors. We're going to get into it right now. First of all, let's talk about price action. North Shore Global Uranium Mining ETF up 0.58% on the week. You got to compare that to the benchmark for broader financial markets. S&P 500 up 5.61%. But zoom out, look at the 1 month, guys. North Shore up 27%. S&P 500 broader stock market only up 3%. So uranium is vastly outperforming the broader market. And we've talked about the bullish fundamentals for this asset class. But here are the most exciting developments this week. U.S. senators introduced bill to ban U.S. imports of Russian uranium. What did we talk about last week and the week before? The nuclear energy associations within America have begged governments to not do this. They've begged the US government to not ban Russian uranium because it's going to squeeze the supply and make the prices spike. And so what we've learned over the last few years is that governments make decisions based on emotion and the will of the crowds. And so if the emotion of the crowds is, let's get away from Russia at any cost, well, here we are. Governments are falling for that mob mentality, and they are trying to ban uranium. And you can just already sense that the leaders are going to ban uranium because it's kind of the emotion of the day. And so that's where we are going, which is the most bullish development for the uranium spot price you could ever ask for, because we get a huge chunk of uranium imports from Russia. So all this does is squeeze that already squeezed supply that we've been talking about, guys. John Quakes shared this on Twitter. No more Russian uranium will be used for new small modular reactors, says TerraPower and Bill Gates for the reactors in Wyoming. So there's going to be this industry boycott of Russian power. We know Bill Gates and his firm at least is going to avoid Russian uranium. And so where is he going to get the uranium from? He's going to pay more, meaning the spot price is going to go up to buy uranium from more difficult places, which have a higher cost. So all this supply disruption occurring while the United States is investing heavily into future uranium production. Here's a headline. GE Research gets $4.5 million federal grant to help improve nuclear power. So General Electric is getting paid to invest in nuclear power technology. This is the demand side growing, as we've been talking about. Belgium, massive news here. More on the demand side. Belgium delays nuclear energy exit for 10 years due to Ukraine war. Germany decided this last week to delay it. Belgium deciding it this week. Every single nuclear energy bull has advised this. And it seems that nuclear energy investors totally get it. It only takes a few years for governments to get it that have been bearish on it, because it seems to be the only option. So more bullish developments on the demand side. These supply demand models that you've seen come out of various nuclear energy research institutions do not factor this in. And those supply demand models that I've talked about on the show, one of my interviews with Terry Popino, we showed the supply demand mismatch, and that didn't factor in stuff like this. That didn't factor in Germany leaving its nuclear power generation on. That didn't factor in Belgium leaving its nuclear power generation on. So again, the supply demand mismatch continues. Here's another headline. UK's Johnson to meet with nuclear industry in bid to speed building. Nation pushes for energy self-sufficiency in wake of war. Banks and pension funds are also expected to attend meetings. So the world is turning to uranium. The demand is unbelievably bullish to the upside. We had this article out of Bloomberg Law, guys. Russian uranium dominance leaves the U.S. scrambling to catch up. The Biden administration is working to accelerate domestic uranium production despite environmental concerns. All of a sudden, they're not caring about the environment, right? As the U.S. seeks to lessen reliance on Russia amid possible sanctions. The Energy Department is moving forward with 2 programs that could bolster fuel supplies for the existing nuclear fleet. This is incredibly important. Andrew Griffith, Deputy Assistant Secretary. If we don't get this right, it's going to slow down the really important deployment of this advanced reactor technology in the 2030s and 2040s. So this is a long-term nuclear renaissance happening. The agency is trying to address a mismatch in supply and demand. No U.S. facilities produce the fuel because they would need firm commitments from advanced reactors. Advanced reactors will need a steady fuel supply to demonstrate their designs. And the spot price rising is the only way to really do that. If anything, the Russian invasion of Ukraine makes the importance of this long-term objective even clearer. Right now, we're trying to figure out alternative supply avenues. And so while there are positive movements to remedy the low supply situation, we have this analysis out of Azaria Capital. So Azaria's Capital concluded, while restarting idle capacity will go some way toward meeting the industry's fuel requirements, those idled assets will require contracts in hand. So these miners that are actually getting the fuel out, they're going to require contracts in hand at much higher prices. This is the spot price melt up I've been talking about to begin the restart process. It will then take another 12 to 24 months to begin production and fully ramp up production. All of this points to a market that will feel increasingly tight to fuel buyers in 2022, which provides us with conviction to answer the age-old question from investors contemplating opportunities: why now? In our view, the past year was just the warm-up act for our uranium bull thesis, and 2022 through 2023 will provide the real fireworks. That's because it's going to take so much time to remedy the supply-demand gap, which it seems every single day just gets squeezed more and more and more. And so it's hard to lay it out much clearer than this. You have supply disruption and you have demand booming, all while governments punch their nose to spite their face by limiting the supply, guys. It's a perfect storm. The melt up is happening. It's already begun. It's unstoppable at this point. This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky and you can lose lots of money in them.